Hello, folks. Bill Shanahan, Energy Rogue. Hey, listen, welcome to Energy Live. Brian is traveling today, so he may pop in here a little bit later, probably from some sort of lobby of some sort of facility. I have no idea, but I know he was going to be. It will be a struggle for him to make it today. But we did talk about a little bit about what we wanted to go through here on natural gas utilities, getting it through the summer. All right, we're going to try to keep this to about 20 minutes. And so we're looking forward to being able to go through this with you. And we will do our, let's say I will do my best to make this exactly what you need for today. So if you have any questions or comments, be sure and put them in the comments. Robert's always good to hear from you, bud. Glad you're out there listening. So let's talk a little bit about what the challenges that the natural gas utilities are going to be facing this summer. You know, natural gas is volatile on its own, and usually we see some of this. We usually have some predictability in the summer months, mainly because we know there's going to be a lot of injection. But so let's talk a little bit about what they've got to deal with. So let's talk first of all about the import export balance. So total production is 104.5. Yeah. Currently, we get down about 6.5 BCF from Canada. You notice from the 9 BCF we had in January. Probably not all that unusual, though 9 BCF's a pretty high number we usually get. Just remember, Canada's upping their volume to try to meet the Kitimat 2 BCF commitment that they have coming up this year. And then we've got 17 BCF a day going out to LNG exports. This has been rising, and the increase of LNG is always going to be a challenge. Remember, these are facilities, and when you see 17 BCF, they can have a 1 to 2 BCF go down if a facility goes down reason. So there's some volatility just built into the fact that these are mechanical facilities that are exporting this. Now realize that last year we were at around 14, 15 BCF. So we increased another 2 BCF. We talked about that in the past year. We've got more increase in volume coming on this, and we'll talk a little bit more about like that. So let's talk about what's affecting the Canadian import factors. The tariff pressures. The new trade policy has increased costs for natural gas coming to the U.S., but it's also reduced the import incentives for the suppliers. The real question we have is that, that I personally have, is that is the 10% enough for Canada to start moving somewhere else? I mean, it's going to take them to build quite a bit of infrastructure, like $25 billion worth of infrastructure, to completely cut off the U.S. Or is the 10% going to be a factor? I don't think the prices are going to rise by 10% in the U.S. I think what's going to happen is that volume will be filled. But you also have the Kitimat LNG project, which is going to be diverting some gas supplies, and it's going to be actually competing with the LNG that we have down in the Gulf Coast, and it's going to be able to compete probably easier because it's on the Canadian West Coast, and we'll be able to get to the Asian. So we've seen quite a bit of decline in imports since January. And then the other thing is that we got summer coming on. So that's always a demand spike for natural gas. And let's see if we'll be talking about some of this other stuff here. So LNG export destinations, you can see that we got a lot of it going to Europe right there. And then you got some going to Asia, and then South America, and then China. I guess this is China. So there's very little that, most of what we do is go to Europe, and I think they actually want more. And China, I think, might be, let's see here. Well, Asia, that's excluding China, and then there's China by itself. China's completely halted imports from the U.S. I don't think it's halted imports from anywhere else. Now, if you don't remember, a lot of time this game gets played like we did with the Russian gas and Russian crude oil. So it's going to be interesting how this gets played out on the international market. So that's the other thing I wanted to talk about. All right. China imported about 1.2 BCF during the June, October last year. They've got zero imports coming in from the U.S. There's always political uncertainty with China, and the market could provide a potential oversupply domestic summer market. Um, I think the import decline will be interesting to see if it's an import decline from somewhere else. I mean, this is going to get really interesting to playing doing the trading complexities, and I think we will be following this very closely to see what the total demand, if there's any kind of total demand change. Right now, I'm not expecting any kind of total demand change. I think it's going to reshuffle the board a little bit. And so that's what we're sort of paying attention to. And if you haven't been paying attention, one of the good things you can find from us is that it is an energy road. We follow this stuff on a regular basis. We're constantly looking at the math. We're constantly doing that. And you can subscribe to us and you can look at this at our Rogue Edge product, which is $179 a month. We always got to put in that plug, $179 a month for Rogue Edge. And the real value of the Rogue Edge is not just what you see, it's what you learn, especially on our Discord channel. You can learn. It doesn't matter if you're trading these energy commodities. It doesn't matter if you're a end user, whether you're a producer, whether you're. In fact, if your business depends on the price of natural gas, or the price of crude oil, or the price of energy in whole, you need to be studying this because it's hard to make business decisions if you're looking at an energy uncertainty. And so this is what we try to help you do, is be able to understand where you're going with your energy uncertainty. And believe me, it's no fun to be in that situation. So let's move on a little bit here and let's talk about power demand growth. You know, we've historically grown by about 2 BCF annually, and that is basically continued on with power. Now, most of that, just remember, the power demand growth is not everything with natural gas. It's about 45% of the natural gas demand. But as you continue to grow 2 BCF a day, it's a pretty big growth. This does not include what the current drivers are. The current drivers are data centers. This is going to be an interesting new hiccup. It's actually going to be almost a whole new category for natural gas demand. And what that is that a lot of these data centers are trying to take their electrical needs. Some people call it behind. I call it off of the grid. In other words, the current ways that we measure electricity are going to be different because the data centers are trying to have their own private, and emphasize the term private power, and the gas that will provide that will come, and it won't be going into traditional power grids. The power grids are not strong enough right now for these data centers. They don't move fast enough for the data centers, and the fastest thing they can do to get electricity is with gas turbines. And so that's where we see the speed in which they will be developed will probably be the speed at which they can get turbines delivered to provide electricity. And that's what we're going to see. Is we're going to see that, and then we're going to see that going off the grid, and most likely off of the LDC. So you won't see that. So
we're going to see the LDCs have a difficult time. Can you hear me okay?
I can hear you all right. Getting a little bit of background noise, but getting to hear you okay.
Okay. A little bit of background noise. All right. Well, I just wanted to drop in. I'm at the LDC Forum in Savannah, Georgia, which actually has just 5 miles away is an LNG export facility called Elba Island. And Elba Island exports, I think, about 200 to 300 million a day. And exports are key. But anyway, I just wanted to drop in and say hi. Hopefully, can you hear me okay, or is it a little funky?
Oh, it's always a little funky with you, but that's just your voice. No, there's just a little bit of a hum and a background noise. That's all.
I
I
gotcha.
figured that was your helicopter flying in. I figured that was your helicopter flying in to pick you up to take you to your next location.
That might be it. That might be it. So anyway, but yeah, I just wanted to hop in and say hi. And let's see. I am going with. Is that a little bit better sound?
That's actually worse.
Okay, we'll stick with this one. So
Yeah.
so anyhow, yeah. Well, utilities. There's a power demand growth. That is actually something that we were discussing at the conference here, and power demand over the last several years in the summer has increased. How much, Bill? Like 2 BCF a day?
It's actually running about 2 BCF a day on an annual basis. So that's what you usually see as a growth. It's usually about a 4% demand growth, but their demand growth is a little bit different than how we look at it. 4% on them is about 2% on us
Wow.
because
Wow.
they don't get all their stuff from natural gas.
Right. Right. That that makes sense. That makes sense. Well, and at this conference, AI and data centers were front and center. And you know what's astounding? ChatGPT is only 2.5 years old.
Yeah, yeah. It's We're going to see a whole lot big larger these large language models come in there, and we were just we I was talking the fact that these are going to be off grid applications. They don't have
Right.
time for the grid to do it, so there's going to be more of a private grid created. And
Yeah.
so now we're going to start seeing private power companies that may be owned by Microsoft. And
Yep.
so that's going to be a real interesting change to our whole energy mix in the United States.
Right.
And
No, I
and what that does though, and we were just getting to this point about future challenges, Brian, is that the more we bring on solar and wind, we're going to start seeing a lot more volatility on the power grid. And
right.
I was wondering whether at the LDC, whether they addressed what they're going to have to do to keep their security on their power grid, because that's going to be an interesting challenge for them.
Well, let's walk through a quick example. I mean, you have Canadian imports down, you have rigs down, so that production could be flat or supply could be flat to down. So that is a bullish case. Then you have LNG exports, which are now in a nebulous place. China was importing 1.2 BCF a day last year. In January, it was zero. We haven't seen February, March numbers yet, but now you get into
Okay,
power
Brian,
demand.
let's talk about that real quick because did they take all their imports down to zero, or just the imports from the U.S.?
Just the imports from the U.S. It was not, but it does get interlaced with. Are there reduced economics that are actually happening out in the marketplace that because of recession they might be taking
Yeah,
less demand?
well,
How about that?
uh, comes with his own sound effects, folks. Comes with his own sound effects. That's those LNG people who don't like what you're saying, so they're letting you know about
Clearly,
it.
clearly. But yeah, that might be an LNG ship. I'm only 5 miles away from Elba Island, but no, I think you are spot on accurate. And anyhow, it gets into a long standing debate. But power demand, we were actually just talking about the duck curve because of solar, because of wind, the difference between noon and 6 p.m. on a power utility perspective is massive. They need so much more at 6 p.m. because of the lack of sun and wind at 6 p.m.
Right, right. And it's not just it's the natural weather. Besides anything that comes in along that's like storms or anything else like that's related.
Mm-hmm. Yeah, you're
So
exactly right.
so we were just talking about this as we talked about this, the peak shaving is going to be the really tough part. The coal to gas switching, though, is going to be really interesting because coal, a lot of people say, well, coal's gone away. Well, it really hasn't gone away. We're exporting a lot of coal right now to other nations. And, but the bottom line is that the coal is, I know this sounds crazy, but China's about to have a cleaner coal fleet than we do because they put on all the new technology, and we have not put any new coal plants in to get a cleaner technology. And so there's a possibility that that if we do have power demand needs that can't be met in the U.S., that we would be looking back to coal, because we all know that, hey, listen, we talked about we would never see nuclear come back again. Well, maybe not.
Yeah.
So,
well, I think nuclear. Anyway, the question is it going to be a small scale or large scale?
Right.
I think.
And well, the key is that the technology is going to get better, but it usually takes close to a decade for that technology to be efficiently better and economical.
Right.
And so what do we do? What do we do during that time? And so I think the real key here, though, is that we're going to see a reshuffle of the board on how we've traditionally thought about energy and everything else. And so what you need to do, what do they need to do, Brian? They need to follow a certain group. I'm trying to think of what would be the best group to follow.
Well, staying on top of energy markets and energy trends is going to be important. You don't have to listen to us if you think we're annoying or you don't like or respect what we have. Go find another voice to listen to. But we are going to continue to track natural gas markets, crude markets, natural gas liquid markets, refined products, because all of the dynamics are changing, not only in the U.S. but internationally. So this is definitely a wave that is changing, and staying on top of these trends. I mean, we just painted a case. I don't think I'm exaggerating on. We could have a $2 bullish case and we could have a $2 bearish case. So that's my 2 cents, and that's directly from the LDC forum where we're talking about volatility in LDCs and data centers and demand side.
Right. And folks, we paid extra to have that ship going behind Brian in the background. I mean, not many people can actually schedule that correctly, but there it is. It's a big container ship going behind Brian. That's what that big noise was a while ago. Well, Brian, we're just about ready to bring this to an end. And I just want everybody to know that if anything that you're saying that's going to happen for somebody's telling you that the next 90 days, this is exactly what's going to happen. Yeah, that's not going to be it. And it's not going to be one thing. It's going to be multiple things. And that's the thing that's what you have to pay attention to. You can't just pick one thing and say, yep, this is what it is. No, that's not it. You got to have a lot more than that. And that's what we provide here at Energy Rogue. Just so reach out to us, subscribe. Hey, listen, it's going to be the best money you ever spent. Promise. Okay, that's maybe not the best, because I had a really good steak the other night. That was pretty good money spent.
Ooh, you just made me hungry.
There you go. Well, it should be about time for you to go get something to eat. Hey, listen, folks, we appreciate you staying with us, and reach out to us. And I tell you what, Brian, listen, you be safe out there, and go pay that $100 to that ship captain to come by you.
All right, I got to hop off, but thanks so much.
See you guys.